Hello, and you're welcome to Global Business Insights, where you get more details on key business headlines across the globe. Just in, Nigeria headline Purchasing Managers Index was 52.1 in May, up from 52.1 in April, and signaling modest improvement in business conditions, but still less pronounced than the historical trend. Germany manufacturing May PMI came in at 45.4 from 42.5 in April, while Eurozone May PMI was 47.3 for manufacturing from 45.7 in April. This was the highest reading in the headline index since March 2023, indicating the slowest deterioration in the health of the euro area goods producing sector for over a year. UK S&P Global Manufacturing PMI rose to 51.2 in May, up from 49.1 in April, its highest reading since July 2022. Earlier, China's Caixin S&P Global Manufacturing Purchasing Managers Index was up from 51.4 in April to 51.7 in May, also beating market consensus, also a 2-year high. Over the weekend, OPEC Plus extended its production cuts while also planning to begin bringing some oil back online later this year. This morning, Brent crude was lower in early trade, just under $81 a barrel, and Saudi Aramco sold out its $13 billion stock sales in a matter of hours. And we also look at the future of the Nigerian oil and gas industry in the hands of indigenous players. Indian markets and currency hit all-time highs after exit polls predict a landslide victory for Prime Minister Narendra Modi. Nvidia on Sunday at the Computex conference in Taipei unveiled the successor of its Blackwell AI chip called Rubin, just 3 months after its most recent launch. And Advanced Micro Devices also unveiled MI325X accelerator, available in the fourth quarter. That's its own latest artificial intelligence processors. That was also today, with plans to develop AI chips over the next 2 years to challenge industry leader Nvidia. Nigerian Breweries PLC over the weekend completed acquisition of a majority 80% stake in Distil Wines and Spirits Nigeria Limited. And we continue our review of the first year of the Tinubu government. This time, Tola Adeyemi, CEO KPMG West Africa, tells Global Business Insights that investors see improvements in the business environment. Meanwhile, the government says the 494,000 national minimum wage being demanded by organized labor is unsustainable. Nigeria PMI showed slight improvement in activity in May. Purchase costs and selling prices increased at their slowest rates in a year, thereby supporting a sharper increase in both output and new orders relative to April. Business activity was up to the largest extent since January, while growth was recorded across all 4 monitored sectors, with the sharpest rise in manufacturing. Anecdotal evidence was said to be pointing to improving customer demand amid signs of inflationary pressures easing. The release commented that, as expected, the interest rate sensitive sectors experienced a slowdown in growth, but the manufacturing sector still improved modestly to 1.49% year-on-year from 1.38% year-on-year in Q4 2023, albeit still lagging the 3-year average growth of about 2.4% year-on-year. The PMI is pointing to a slight improvement in the second quarter of 2024 in terms of private sector activity, although still underwhelming compared to second quarter 2023. Analysts expected domestic demand to remain weak relative to the historical average, exacerbated by inflationary pressures, which is expected to have peaked in May. In addition, interest rates at unprecedented highs will continue to have a negative pass-through effect on the non-oil sector. The PMI release projects, thanks to the oil sector's growth, that the overall economy of Nigeria is on course to grow by 3.51% year-on-year in real terms in Q2 2024. Analysts and business leaders are still commenting on 1 year of the Tinubu government. Tola Adeyemi, senior partner for KPMG Nigeria and CEO KPMG West Africa, says there is optimism on the outlook, but more is needed to improve the environment, adding that crude oil production can also be higher.
In the conversations that we're having with our clients and prospective investors, a number of common themes emerge, both on the positive side as well as in terms of areas that require further work. So on the positive side, Nigeria remains a country of interest. Certainly in the early days of this administration, investors were encouraged by the bold steps taken by the administration. The other thing investors tell us is that each time they come and speak with senior Nigerian government officials, those officials appear to be saying the right things. So in terms of the plan that's in place, it appears to be the right plan. However, our clients and investors also tell us that they're concerned about certain red flags. There are two principal red flags. The first is the volatility in the exchange rates. Now, I'll emphasize here that it's not so much the fact of the devaluation, but the fact that that devaluation is yet to settle down, and we continue to see spikes and falls in the exchange rate, which adds to the uncertainty investors have in being able to properly plan and build sustainable financial models. The second red flag has to do with the difficulty in repatriating earnings out of the country. As you know, for any investor, the game plan is to bring money in, make a return, and be able to take that money out. Our clients and investors tell us that it's difficult to do so, and in the process of waiting to repatriate their earnings, they have lost significant funds. These are clear red flags for the investment community. In addition to these red flags, there are some other factors which are also of concern, and these are the high inflation rates that we're experiencing, the high interest rates, and the security situation in the country. Investors seem to understand that investing in Nigeria is a long-term play. So many of them are taking the view that we're going to sit and wait. Now, when we've asked them, what are the indicators that you're looking for in order to pull the trigger and make that decision to invest? And they tell us a couple of things. One, they tell us that they would like to see improved fiscal discipline, because it's in the fiscal discipline that will give them the confidence that the country will be able to properly manage its foreign currency earnings. As part of that improved fiscal discipline is the need to deal with the issues of oil, frankly, the oil production, the need to raise the level of oil production. So that's another indicator that they're looking at. The other thing they tell us about is that they are yet to see and would like to see a more coordinated response to the security challenges that the country is facing. The third trigger has to do with the government frontally addressing the issues around the ease of repatriation of funds in and out of the country. So these are the things that our clients and our investors are telling us. And it therefore says to government straight away that in order to enhance confidence in the economy, there's a need to address the issues that are red flags to investors.
OPEC Plus meeting held yesterday, and as widely expected, they agreed to extend group-wide output cuts to the end of 2025 and also prolong voluntary curbs through 2024. Earlier agreed cuts of 2 million barrels per day set to expire at the end of the year were extended by prolonging members' baseline production quotas for another year, while also permitting the UAE to gradually increase its 2025 baseline output by 300,000 barrels per day. Nigeria also gets a moderate increase in baseline production of 120,000 barrels per day, and Russia gets additional 121,000 barrels per day. Also, voluntary production cuts by 9 members, including Saudi Arabia, Russia, and the UAE, totaling 1.66 million barrels per day, and due to expire in December, have also been extended until the end of 2025, while other voluntary cuts just introduced in January and set to end this month, representing 2.2 million barrels per day, were extended until September and then gradually unwound over the following 12 months. Last year, amid a bitter dispute, the group commissioned external consultants to assess all members' production capacity in setting future quotas. OPEC Plus will extend the assessment period by the 3 independent sources to the end of November 2025, which will then be used as guidance for 2026 reference production levels. Nigeria is one of the countries hoping to prove it can easily do over 2 million barrels per day in the medium term. Angola exited OPEC Plus most likely over dissatisfaction with quotas. The 38th OPEC Plus ministerial meeting holds on the 1st of December, except unusual circumstances require an earlier meeting. Saudi Aramco sold out on its public offering of its ordinary shares, that was yesterday, which aimed to raise up to $13 billion. The offering saw strong investor interest despite a 14% year-to-date decline in share value. Saudi Aramco's $124 billion annual dividend, yielding 6.6%, must have got the attention of investors, as the entire offering reportedly sold out within hours of opening, reflecting high demand. And still on oil, but this time in Nigeria, at an Harvard Business School alumni knowledge event last week, Mr. Austin Avuru, Executive Chairman, AA Holdings Limited, called for NNPC to be reinvented, as he noted that between 2010 and 2022, Shell and Chevron divested 20 assets to 15 Nigerian independent operators, a period in which, unfortunately, investment inflows plunged from $20.6 billion annually to $5.8 billion, and production sank from 2.53 million barrels per day to 1.5 million barrels per day. The transition, he said, to local operators was poorly managed, adding that there is nothing unusual in the consolidation reflected in exits, acquisitions, and mergers, especially in mature basins. But these processes, instead of being managed smoothly, were turned to an approval power play. A long-drawn process where political connections rather than capacity and merit became the qualifying criteria has resulted in extended periods of little or no investment, resulting in an inevitable decline in production, which has been sometimes inaccurately blamed on crude oil theft. Mr. Avuru says a roadmap to 3 million barrels per day is possible, but requires an independent, professional, target-driven regulatory environment and a different NNPC able to foster functional, value-driven partnerships, which allows experienced operators to accelerate production. For now, 1.5 million barrels per day is a struggle, presently the OPEC baseline for Nigeria. And looking at Asian markets, mostly rallying as investors looked forward to a rate cut in Europe. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and for the kind comments and following or subscribing on Facebook, LinkedIn, or YouTube and X. Thank you very much for watching. Bye-bye.